Oh, that's okay, Dino. Can you hear me on Twitter and YouTube? Oh, you're on YouTube. Can you hear me on YouTube? I'm gonna do a giveaway for Tradeify. I post the link. Let me just create that in just a second. Tradeify. Copy. Growth. Today is the 26th. Okay, it's gonna end in like 2 hours. Sorry guys, I'm trying to create the giveaway so that you guys can enter. Next. Today's Central Standard Time. Let's see. How about 3 p.m.? Okay, create. Okay, there's the link in Discord, and then for YouTube, I'll post it on Twitter as well. I have way too many screens. Okay, I posted the link on Twitter as well. So I know that this is going to be like not a whole lot of people are here today, which is fine. And okay, let's get started. You guys ready? Okay, I'm going to do this a little bit differently. For those of you that are brand new to futures, you guys can, I'll do this another time, but you guys can go to propfirmtrend.com. This is all free. Click on trading resources and you can click on start learning and go through all of this. It's going to basically go over all of the terminologies and how to trade futures, you know, what a tick means, what a mini means, things like that, how futures change. Kind of, you know, the best way to trade would be, you know, trading micros. You know, if you want to trade your own personal funds, you can do that as well. NinjaTrader or Trade-O-Vate, they have their own intraday margins. So these are what the day margins are, and this is what initial margin is. So you can kind of go over all of this, and then also moving into the prop firms, how you can trade prop firms. And let's see. The different types of drawdowns. I know a lot of people that are trading, regardless of how long they've been trading futures, a lot of them don't know the difference between these three. And some, you know, they don't know how to size in, you know, for trading and things like that. So if you're fairly new This is going to be your best thing, is to go through that little course. I'll do one next week. I just kind of wanted to hop on today since I hope nobody's trading this price action. But to kind of show you guys what's added to the site, what I've added to it, and also to kind of go over what a lot of you have been waiting for. You guys are more like my test group for the order flow course. I updated most of it. I'm not completely finished with it, but most of it is done. So I'm just gonna like run it through you guys so that you know you guys can kind of pinpoint what you're looking at, what's missing, what I should add more, things like that. I wanted to add, here, for example, I just added these a little bit ago, but um, you guys can track your own, like track your costs and payouts and stuff for prop firms. So this is new. These are fake numbers I just added to see if it's going to hold. You can import, but you can put it if it's an evaluate. So sorry, import. I don't know, whatever you want to add. Prop firm name, how many accounts, if it's an evaluation, if it's a straight to funded, things like that. So you can track your costs. Yeah, obviously Apex is not $2, but it's going to help you kind of see, the ROI, and you can kind of put your net P&L, and then at the end, how many payouts you get, your withdrawals, things like that. So that's new. It's in the firm cost calculator. That's also where you would go, and you can compare different firms, obviously, with whether they're, Tradeify with whatever their discount is versus, Top Step or versus Futures Desk, whatever you want to kind of compare it to, you can do that on here. Another thing that I've added since last time I've had anything, let's see, did somebody tag me? Okay. Here you can kind of see, remember, small daily gains add up. So even if it's $20 a day, $100 a day, $500 a day, don't forget that. I've been, over the past few years, I've been used to trading, the bigger accounts, 300K accounts, 150K accounts, and you kind of tend to forget, making the smaller amounts. And so I went back and I started doing some 50K accounts, just to kind of humble, you got to humble yourself or the market will, right? But also to kind of gauge how it is to trade the smaller accounts. And so, for example, hang on just a second, let me click this off. No, wrong one. Let me just. These are my 50K accounts these are funded accounts with Tradeify. They're called select accounts and daily withdrawals. So I've withdrawn from some of these, and I've also taken, a loss. When was it? Not yesterday because we didn't trade, but the day before. But I don't need to make, 1,000, 2,000, 3,000 compared to my other accounts that are funded. Because they're bigger accounts, so obviously I'm taking a bigger risk. But it is very interesting trading micros on these accounts and trying to stay not hitting that daily limit, which is $1,000, daily loss. So it for me, it's been more of a it's been a challenge, not gonna lie, but just to kind of show you guys that it can be done even with micros. you know, whereas like, where's my funded accounts with Apex? So where, you know, the bigger accounts, they're obviously, I started these new ones a couple of days ago. Or no, sorry, today, actually. I didn't start a couple of days ago. Starting today. So with that said, it can be done with micros as well. Obviously, it's not going to be, you know, the same risk. Okay, so don't try to risk more than, you know, go in here, use your position size calculator. Also, if you trade equities or options, you can also input to see what your, you know, whatever your account size is, risk per trade. You know, to help you with that risk management, because this is the most important part of trading. So you can either do, you know, futures. Down here, you can, you know, if you guys are into, if you're trading with a firm that needs to have consistency, you can input your, you know, whatever the consistency rule is and whatever your big end of day P&L is. And it will tell you what you know, can or can't, um, or sorry, whatever your balance is needed for that. Growth calculator also. And then for those that trade micros, because this is another thing that I've seen and I've noticed, I usually don't do DCA, so I don't dollar cost average in. The only time I do that, it's called a reverse scale, is when I try to go, um, when I have my far from moving average trade set up. And I, you know, if I start a position, I'll start it with like a small amount and then I'll add in. So that's so this calculator here kind of helps you if you are trying, like let's say you have a, I don't know, $2,000 account, you know, input your entry price and then an interval. So like every 10 points, um, you know, you can, it'll tell you here, like let's say you entered it 21,000 with micros, okay? So you entered one, I don't know, the price started going against you. You know, you can add another one and it will tell you what your average is. So instead of, you know, the 21,000, now it's 20,995, what your risk is. So if you are um, entering or doing dollar cost averages, you need to do it in a way where you know, you don't want to do like, um, let's say you enter here and then, I don't know, at random price you start entering 3 and then a random price start entering, you know, more or less, whatever it is. You can kind of, this is more calculated. So there's, you know, aggressive stance, there's a pyramid one, there's moderate, and obviously this is a very conservative approach. So even if it went down, you know, there's not that you should ever do any, you know, do this, but if you happen to do DCA, then do it properly. So just wanted you guys to kind of see this. Okay, Dino, I don't know. Okay, so that's kind of what the calculators, you know, in there are. Obviously, you guys can go and check out the December deals. There's a few deals that are ending today. Oh, I need to update Tradeify. Tradeify is 40% off, and I think it ends today. Lucid has 50% off on new customers, and I think 40% off on, you know, so you guys can check that out. All right, so here is the order flow course. Okay, now those of you that are in my Discord, you guys have gone through this with me. This is, you can access this up at, come on, whoops, that's not what I wanted. That's not what I wanted either. See up here where it says order flow course. Again, I'm just kind of going over this right now. for the first time with you guys. I'm not going to go into full depth of it uh, because that's going to take a lot of time. But I just kind of wanted to show you guys where it is, what it, how it looks like, and you know, uh, doing order flow footprint, which is this, is not as standalone. You're looking at it and you're like, oh, I'm gonna go short, I'm gonna go long. No, that's not how I trade it. I don't know how others trade it, because I've been using order flow footprint for over 3.5 years, longer than a lot of these newbies that are using order flow right now. And I use it in respect with my technical analysis. For those of you that don't know, my mentor is a retired market maker, and my second mentor is, well, actually, my first mentor, the is David Green, who is a retired market maker, and my second mentor is Peter Tuchman, which you guys probably would know by Einstein Wall Street. Okay, so with that said, when I use my order flow footprint, I use it in conjunction with my technical analysis. Okay, my technical analysis is very simple. What I use, and I've got I use moving averages, pivot points, RSI, but you have to know when these are used. Okay. EMA 9, I see a lot of people using it. They use it for everything. That's not what it's for. EMA 9 is only for trend trades. EMA 5 is for parabolic moves only. So the smaller the number, that's the weakest. Okay, so those are our trend trades. When we break between this 30 and then we start to go up to 65 and 200 EMA, that is more of your regular moving average trades, which means when we have trades that are just moving, consolidating, okay? It's not really moving up or down. It's kind of like what we're seeing right now. So anyway, I got my demo accounts here, and I was going to show, like I always do on my stream, for those that, the difference between micros and NQ. But I'll also show you guys. So I'm just going to execute just so that for those that are new to futures. So like one MNQ versus one NQ. So notice how here the price moves. It's 25,884, but it says 0.0, 0.25, 0.50, 0.75. So it moves in a 0.25 spread. And when you're trading micros, 1.4 micros is $2 versus 1.4 minis NQ is $20. So when you're starting out to trade, you want to start using the micros. Instead of kind of like if you're trading options, not going from you're brand new into options, try to trade it, and then you start trading NDX or SPX. So that's kind of what the difference is. This is kind of more like QQQ versus NDX, or if you're trading ES or MES, it's like SPY. And so anyway, let me just take this off because today we're going to do a little bit something different. Actually, where is my trading view? Let's pull that up. So here, like I said, I use moving averages. You know, everybody uses their own thing. That's fine. Over the years, I have tried many different types of courses and strategies and all this stuff. And to me, it's just not as precise as this. And that again comes with if you know how to use it. If you don't, then obviously it's not going to work. um, so what is okay? So I'll get there, Ahmed. But basically, I use 5 EMA, 9 EMA, and 15 EMA. These are for trend trades only. 5 EMA is the weakest. That's used for parabolic moves, meaning when we start to have like a fast movement, you know, let's go into the 5-minute. Obviously, today and this week, we're not really going to have the best. RTH, I need ETH. There we go. All right, let's just kind of alrighty, so this here was December 24th. If you guys see here, this is a trend trade, okay? Here, this is a trend trade, right? Well, let's say we didn't get in. You know, this right here is the EMA 200, the gold line, okay? And notice how we came and touched it multiple times. It held and boom, it went up. Okay, this is where I actually even wrote out my plan where I was planning on taking a long. However, as soon as like right before the market open or like right at market open, it wicked here and then it just like shot up. That's this candle here. And I wasn't going to chase it. We did take a short. I scalped it a little bit. I even missed the short just because like, you know, this kind of moved really fast. But anyway, this EMA 200 held. Now, if you notice here, you can't tell, but this is the pink line. Nope. Can we maybe make it lighter? Okay, maybe like that. Okay, that's EMA 5. So let's say we didn't get in down here. What we would do is we would wait for it to come back and retest and hold this pink line to get in, you know, for a long. Okay, the thing is, you can see this up here as well, how it's holding. Only once here did it come down to the EMA 15, which is the red color, or even like the EMA 9, which is the blue. Okay, so this is what happens in parabolic moves when it moves pretty fast, and it just seems like there's just no red candle. There's nothing to get in. Well, there's always a little bit of a pullback to get in, you know, at certain prices, which, you know, that's what the trend trade means, which is this here. Okay, so 5, 9, 15 on the 5-minute, 200 EMA and 65 EMA. So primary support and resistance. So 200 EMA is the gold standard pretty much. It's the, you know, the higher the number, the better the hold. In fact, you can even, like, if you did 233 or 235 EMA, you can see that's kind of where they wick a little below too. And you know, it's pretty strong. Okay, 65 EMA is the secondary support. So a lot of times when you see 65 and 200, a lot of times the price is going to move between the two. But the reason why I use EMAs instead of SMAs is because EMAs give more weight to the most recent, more relevant data versus SMAs. Okay, SMAs are great on a higher time frame, you know, like on the daily, weekly, whatever. So, you know, you can kind of go through here and, you know, mark RSI. The only time I use RSI is if we are above 80 or below 20. The higher the time frame, the better. Okay, so if we are 80 or above, we're basically, you know, getting to an overbought level. We would be looking for a short. When we are below RSI of 20, we are fairly oversold. We're looking to buy. You want to use it in confluence with your EMAs for confirmation. Like I said, the higher the time frame, the better. And pivots, pivot points are key levels. They do not change from, they don't change, like they're the same throughout the day. They don't change. They're just your key levels for that day. So basically it's calculated from the previous day's high, low, and close. Trading above the pivot point is typically more of a bullish sentiment, whereas trading below the pivot is more of a bearish sentiment. So, you know, with trend trades, the general rule is you want to wait around, you know, 9:45 a.m. to establish if it's a trend trade. You would want to be looking for pullbacks to 9 or 15. If it's a parabolic move, then you want to wait and have it pull back to 5. Okay. And you would know if it's parabolic is if it's moving really fast. And you guys have seen the difference, you know, whether it's going up or down, doesn't matter. If it's really fast, then it's a parabolic move. If it's just a normal, you know, trend, it's going to be, then you would be looking at these higher EMAs. You would enter your, you know, 1/3 position. Can I show an example? I just did. See this? This is EMA 5. That pink color, blue is EMA 9. Red is EMA 15. The parabolic, so the parabolic is like, hang on. This move here is parabolic. This move here is parabolic. The thing is that even, you know, those were like the moves that went up and down, but that was, I think we had data or something came through. Let me see how to, okay. All right, this here is also parabolic. So it's just, okay, look, we started out at 25,333. Within a few candles, we were already up at 25,557. This is parabolic, meaning it's fast moving. The price is going up pretty fast. RSI is, you know, going up. That's what parabolic move means. Does that make sense? See how we moved up parabolically? You wouldn't try to long up here, but it came down to 525. You could have entered a long there because obviously at this, I mean, you could have actually entered a long down here at 410 on this pink line. But it moved up really fast. So let's just say you entered here at 525. It went up to 600. It still gave you enough points to get. So parabolic just means it's fast. It's like, you'll know next time you look at the chart when it's, you're gonna be like, all right, this is what Minx is talking about. Okay. Whoops, that's not what I want. Okay, so that's what regular trends is, you know, just the regular, you know, I call it the staircase up. I absolutely do not like those. It's like just a grind, you know, like it's in an uptrend, but it's a slow grind. I don't like those. Those are not my ideal trades. This here is a, see how here it's kind of doing this. this gold line is EMA 200. This is typically your regular moving average trade. What that means is that people call it chop, which pretty much it is. But that's how it consolidates. So each time, if you really wanted to take a trade, it came down to 690, held, went up to pivot 727. So you could have played, here, shorted, gotten out, bought longs, gotten out at EMA 65. So you could have, you can't, that's kind of how people can scalp if you know how to do it. And while you're reading the price action, I don't recommend it. If you are new or newer, just realize that EMA 200 on the 5-minute is pretty strong. EMA 65, they tend to kind of go hand in hand. So okay. So that's what I was just talking about, the regular moving average trades. You never use your 9 or your 15 or your 5 in regular moving average trades. You would just use the higher EMAs, higher probability setup. The faster the price comes to it and touches it, the better it's going to be. So like even this morning, right before the market opened, see this wick? Wicked right below EMA 200 and shut up. I mean, if I had like limit orders there, I could have taken it, but I didn't. So I don't like taking anything the first minute anyway. Okay, so double top and double bottom. That's also another thing that I look at. What you want to see in that. So there are validation requirements for this, meaning it needs to be at least a minimum of 30 minutes between the first and second test. If it's been 10 minutes, if it's been 20, that's not really a double top or double bottom. And you also want the price to move significantly between the two before you would take a trade there. So and then this is the FFMAT strategy. This is one of my favorites. This is a little bit harder to gauge, especially if you're kind of brand new looking at it. It takes experience and practice, but basically when a price moves significantly away from their closest moving average, they tend to gravitate back to them. And what that means is that you would be looking at your, oops, where is trading view? Actually, there's an algo for this in the Discord. But we're in the 5-minute. So the higher the time frame, the better. But this here is this is just the 5-minute chart, so I'm just going to kind of show you guys. We have at least 3 green candles in a row and an RSI of 80 or above. So RSI here was fairly above. It's going to start to cool down a little bit. So it cooled down from like 67 down to 525. It didn't continue to cool until we hit 600. And I think, let me see, did we get a FFMAT on the 15? Yep. So at least 3 green candles in a row in the 15-minute, RSI is 80 or above, we are going to start looking for a reversal. And it reversed from 600 down to 460. It has to have both. Okay, at least 3 green candles in a row. It can have 10 green candles in a row. It can have 20. It doesn't matter. It needs to have, and also typically once you get like a red candle, that FFMAT is kind of broken. Doesn't mean it's not going to happen. That a reversal isn't going to be imminent, but I like these for intradays, I like the best when it's in the 15-minute. So if we start to get like this FFMAT in the 5 and 15-minute, it starts to reverse to take a short. It it just means that they're rotating their money into somewhere else. If it's in the higher time frame on the daily, if you're looking at like Nvidia or I don't know, Amazon, whatever stock you're looking at, or you would want to, if you see it on the daily, then if you're playing with options, you can go date it out a couple of days, or sorry, a couple of weeks, and do a swing position in the opposite. So like that's how I caught Meta and Tesla when it was at the top. They just need to cool off. That's where they start to take profit and then rotate that money into other assets. So are you guys bored? So that's kind of like the, just the technical analysis that I use. Obviously, it's a little bit more in depth than that. Then when we get to the order flow footprint. So here we have bar markers. Okay. It tells me what each bar marker does. Now, I'm not going to look at every single bar marker. I'm going to look at the delta. And I look at everything when we are around my key level. So if we're around, let's just say around the pivot point, around, whatever my key level is, then I'm going to look at my order flow footprint to see what's happening. So it's kind of like looking at the, so right here, you got the little bar marker. It tells you what it means, like fat print, traffic jam of orders, tons of trading at this price. This level is important. It tells you, heavy volume concentration, a specific price. This is one of my favorites. If I see an arrow up or down, so if it's up, delta is rising, buyers are getting more aggressive for each bar. It's like an army getting reinforcements. Delta is increasing, buying pressure is building. Bullish momentum building, look for long. So for delta, which is what I just showed you guys, let's say it's up 100, plus 300, 600. So buyers are gaining strength. And that's what this means. Okay. So anyway, you can go through, there's 28 of these different bar markers. Okay. So this is kind of like a little index. Okay. And then go to order flow. And it will talk about what delta signals are. If we have like 4 consecutive bars with increasing delta, delta sweep indicates like a big trader is entering to push the market. So what are sweeps, trading sweeps? So this is kind of like more of an explanation to different, what a value area is, what POC, point of control is, volume analysis. You guys can go through this later. I'm just kind of showing you guys what, what I have in here and what I use for my trades. So there are so many different types of but I look at all the signal sweeps, value area, and point of control. I look at unfinished business, fading momentum, bar ratio, what it means, like if it's underneath a candle, it means like it's a very bullish stopping. But up here, what it means, buyers are building a floor here. So just kind of, it will give you like the significance of the of the ratio value. I am combining words, you guys. Again, this is more of like, volume profile, volume area low, high, session POC. And then this is where I kind of left off, which is the introduction to bar markers. So the golden rule is the more a bar marker has at a level, the stronger it's going to be. It's going to be a stronger signal. Multiple markers confirm each other. I mean, if there's 10 markers at one level, which can take some time, this is going to be really fast moving, just like the other day when we had, I just want you guys to see this. Can you guys see this? This candle here when we opened up the other day. So see how in the bottom there's actually, you can't see it perhaps, but there's 10 bar markers. And we went from 25,630 to 7, I can't see what the number is here now, but I think it was like 760 within the first minute. It was just, but we go back and it's going to tell you all of the bar markers that came in. The sellers were exhausted. There was buying imbalances. Shorts got trapped, so it was a squeeze. Support was holding. Sweep came in, buy sweep. It also revisit the lower, and buyers were defending. It was that ratio that I was just talking about. I think the ratio was like 0. You know what? Let me go back to the 5-minute chart. Can't remember what day this was. But it was like right at the open. It's a couple of days ago. And I just want you guys to know I'm doing this stuff for free, you guys. I'm not gonna pretend I am an expert in order flow footprint or in anything, because everybody uses it differently. So there's not one way or another way to, like, what works for me might not work for somebody else, and what works for someone else might not work for me. So with that said, I think it was this candle. This is a 5-minute, but we need the 1 minute. Whoops. And this is how I interpret this chart. Like I said, over or around my technical analysis. So if somebody's using something else, that's fine. This helps me, and it gives me further insight into a candle, into what's happening real time as orders are coming through. I don't have time to sit here and read every single little numbering here. That's why these bar markers are important. It tells me the importance of it. And even if you don't know the name of it, that's fine. Your brain, the more you watch this, the more your brain just starts to register, like, oh, there's that, is it cyan or cayenne? Ratio on the bottom. Well, look, we were bottoming out here. We went from what, 25,865, to 25,900. This is overnight. No, it's not. Yes, it is at 3 in the morning, like 3:30 in the morning. Okay, so there's not a lot of volume, and this is a pretty nice move. Okay, that's I'm not a quant, so I'm not going to pretend to be one. I don't need to know that stuff. As long as I know what these bar markers do when I'm looking at it and I'm fast to react to it, that's all that matters. As long as it makes me green, I personally, it's not like I'm going to be building or creating this chart. So like I said, everybody has their own way of interpreting but I can't remember what date that we had that, that I was going to show you guys. Also, I don't trade Globex. These signals are not the best in Globex because we have so many, look, so many sweeps. You have so many, there's just no volume. So there's no point in trying to play with this. Where is my chart? Come on. Can't find it. Now I kind of feel like I forgot what I was even looking for. Does this make sense to you guys? I mean, not this, obviously, but what I was just going over a little bit ago. The technical analysis part, not the order flow footprint. Right now, I'm just scrolling because I'm trying to find something specific, but I can't seem to find it. Huh. I don't remember what day it was. I just know it was in the morning. I think it was the first candle of the morning or of the New York session. Maybe here? No. One, two, three, four, five, six, seven, eight. No, this one had 8. Okay, well, anyway, the more of these bar markers on the bottom or on the top, the more pressure there's going to be from one or the other side. Let's see. Could be Monday, yeah. But now I forgot like what date. One thing I don't like about NinjaTrader is on the bottom it doesn't tell me what date it is. However, oh, here it is. Look at that. This is a 1-minute candle. So we spiked. Okay, so see on the bottom. Now this green line here, that's EMA 65, but I never look at it on the 1 minute. But we've had the ratio, we had the sweep, thin prints. So we had 10 of these. Like I said, you don't have to remember what they are, but as long as your eyes can see, holy crap, there's a bunch of bar markers. Something's gonna, you rarely see 10. And we went from 6:30 to 6:38 to 7:20 in less than a minute in this candle. And we continued up to 7:38 on this, little candle. So then you can see, okay, the bar markers, it started getting some exhaustion. Obviously, you need to look at the higher time frame, but if you're a scalper, you can technically scalp. Look, from high was 737, low was 699. You can scalp 20, 30 points out of a candle if you know how to read this. If you can see these bar markers and you're like, okay, you don't have to, get the meat off the whole bone. Just take a little bit, you're good. Take a little bit, you're good. So that's what, like I said, these bar markers are. The more on the bottom or on the top, the better the move's going to be. So and see how the ratio down here. Now, obviously, this is just right now we're kind of in a chop, right? Low was 873. Not a whole lot of volume today. It went up to 896. But you can see this little ratio, this little, number. It was trying to hold the floor here. It had more of the bar markers. So just kind of get to know which bar markers have more weight. I don't look at every single one that comes through. Some of my favorite bar markers are going to be like this. The little arrow, whether it's up or down, it means that delta is coming down. We're losing delta. So see, it's up here. We have it here. So that kind of 5 minutes. So yeah, if you kind of see here, it's going to tell you what we've got. Sellers are exhausted, so it means it's bullish. If buyers are exhausted, it's going to be bearish, right? Okay. Next, we've got so that was the first one was that 10 bar markers. We rarely see this, but when we do, you don't want to chase it either, but it's it tends to move pretty fast, and you'll see this like in the parabolic moves. Exhaustion print shows when we have, one side of the market has used up their ammunition. It's like they try to push the price, but it ran out of orders. So aggressive orders that have been absorbed. A push in that direction is losing power. Reversal, or pause is likely coming, and the other side is about to take control. Okay. If it's below the candle, it's bullish. If it's above the candle, it's bearish. But you should never use these bar markers, as standalone. Okay. So I'm not going to be, one thing that I do when I see this X, to me, it's very, very powerful because I've seen the price move pretty crazy, with the X, but it moves so fast that if you're not already in that position, you don't want to chase it because it's, it's fast. This is when a large order or institution, aggressively came in and, entered the market. They swept through all these multiple price levels, and it's very, very aggressive. So that was that X that I showed you guys a little bit ago when we moved 100 points in less than a minute, right? So if the X is above the candle, it's bearish. If it's below the candle, it's bullish. It's deep pockets just made their move. Now, what we can do is what I've also done is, let's say I'm not in when we've got an X, we come down, and then we'll start to go back and retest. So if we're retesting, even if it's like halfway or midway, I tend to, especially if it's around a level of mine, I'll enter in the direction of this, right? And follow the big money. Unfinished business. You'll see this a few times, and well, you'll see it actually more than a few times, but basically price moved too fast for orders to fill, and there's just like a gap in volume at specific price levels. So market skipped over that area. It tends to be a magnet for future price action. So here, I'm going to show you guys an example right now. Let's see if it's going to play out. See this down here, this green line? That's called unfinished business. Now that has been there, and we didn't come down to it. We were close to it even over here. That has been there since 12:35 p.m. and right now it's 2:05 p.m. my time. Okay. Now we've seen it come close a few times over here, but a lot of times they've got some business to finish and they're going to come down for these orders. So and thank you guys for being my guinea pigs for for order flow footprint. Enjoy the view. Hang on. Let's see. Come on, show them what unfinished business means. Come finish it. It's right now it's a 75. It needs to come down to 69. And it's been an hour and a half or two since it's made. The smaller the time frame, it's not as relevant. It's typically not like very far away from. Also, order flow footprint, whatever you're using, guys, it's always best when we have the higher time frames. What I do for order flow footprint, I have half of my screen looking at the 1 minute, and then the other half is on the 5 minute, because my technical analysis is usually on the 5 minute chart. But for entries and exits, I will look at the 1 minute. So for me, like I'm more of a momentum trader within the first 10 to 15 minutes. It tends to, work out the best for me just because I can, like I said, I can see, what's happening within a candle. It's kind of hard. It would be so much easier if everybody else kind of looked at the same thing and we're like, okay, we can see these bar markers coming through. Oh, gee. Okay, let me actually continue on with this. We'll come back and see if it took that. So that's what this unfinished concept is, what it is. Price returns to complete the auction. It gets revisited later when there's thin prints. Okay. So the bar ratio, anything 0.00 to 0.30 is very strong, higher conviction. The higher this number gets, then it's weaker, right? Where is the other bar? Oh, you know what? See? I just noticed it didn't do the bar ratio. The bearish kind that I need. Okay, well, that's missing. All right. So this is more bullish. It's supposed to have the magenta color too, but it does not. So kind of, if you look at everything, the more bar markers, the higher the probability, because each marker is one piece of evidence showing you, and if it's in the same direction, there's not really conflicting signals, right? If it's got 1 to 2 markers, I don't really pay attention. 3 to 4 markers, I look at the 3 to 4, 5 to 6, 7 to 10. majority of the time, but especially like if we are around a key level, then I will look to see, if we are around my key level, obviously I'll watch for price action. And then I will see how many bar markers we have and, which ones are kind of coming through. If it's a stronger setup, I'll take the trade. But key principle, one detective might be wrong, but 10 detectives all saying the same thing, that's more of the truth, right? Real trade example. Oh, I just showed you guys that. Just this chart here when we had the 10 bar markers. But yeah, it's not, this isn't finished yet, but I don't know. I need some feedback. I don't want to waste my time in finishing this up if it's not making sense, if it's not, if it's too hard to understand. Obviously, I kind of went quickly over it because this would take a little too long for me to go over. But does this, at least to this point, does this kind of make sense what I'm talking about, like the with the bar markers and it helps? Okay. So like see here, we've got that unfinished business. Let's see if it's gonna come down and eat these orders. Let me see what people on Twitter are saying. That helps only this page. What do you mean? The point with orderful footprint is you got to put it together with technical analysis. So you need to have a good, like already, you need to have good technical analysis in order to know how to utilize, orderful footprint with this. But Ahmed, I don't understand your question. Or your statement. So it's only $3 away, but it's having a little bit of a hard time to come down and get these orders. That's not what I want. And even over here, so this is that green line. We touched it earlier here. That's where it ended. Come on. I hope nobody's trading this, you guys. I traded this morning. And I'm so glad I called it a day. I just want you guys to see this unfinished business. Because now it's annoying me that it's not getting there yet and it's being slow. But see how even on the 1 minute, which typically I don't look for trend trades, but each time we get to you know, below EMA 9, we just kind of reject and come back down. Okay. Yeah, Adam, it's not chop days. The best thing to do is to try to take a trade or two and that's it, and get out, close it. Like I have my lockout system on, just so that I don't get any temptation. Because even when I get temptation, I can't, you know, screw up my green accounts. As soon as it comes down to the 69, I'll do the drawing. If only there's an explanation video for each TA course page in the Profirm Trend to help with learning. Yeah, no, there's not gonna be that. I mean, I'll like at some point when I finish this course, kind of go over it. I'm just gonna right now, like I said, I just hopped on today because I'm not trading and I want to see some input in the background, but it would take a lot for me to create a video course, if that's what you're talking about. With that said, I need to add in really, you're just gonna fucking stall here. Come on. And what is it called? Bar ratio. Yep. See how that green line just went away? It's no longer there. Took the orders. Order yum yum. But as you guys can see, there's really no volume. It's pretty weak. Alrighty, so again, today this is just more, this is not like it's just kind of for me to go over and see what's missing, what's kind of not, that kind of thing. I gotta, whoops. Um, Alrighty. Yeah, so the only way, like I said, it would be for me to go through and show you guys the sweeps, the things like that. But the most important thing is to really kind of watch. I share this in Discord. I tend to stream it at times when somebody's not streaming, like Bookmap or whatever, but just to watch it for a couple of days. You don't need to know what it's doing. Your mind just needs to kind of get used to seeing, because this is like the Matrix. The first few times I saw this, I'm like, "What the hell is this? I'm not gonna learn this. I don't want to learn this. This looks too complex." Blah blah blah. I tried making every excuse, and then I was like, "You know what? No, I'm gonna push myself, and I'm gonna learn this." And your brain just starts to pick up these little signals. What I am pointing out in this little course thing is there's over 28 different bar markers. As you can see here, I don't use all of those. I only use a few of them. So, thin print, delta sweep, multiple imbalances, trap traders, that kind of thing. That's what I'm like looking at. But if you go back here, is it here? 4, 5, 2. That's not what I want. Back home. Where are you? Ortho course. Here's where it's going to give you the definition of what each little bar marker means. So perhaps there are bar markers in here that I'm not using that somebody might want to use. There's nothing wrong with that. I just don't tend to use it. I do tend to use actually this fading momentum. I'm surprised I didn't have it on. So right here, you can go to all of these and it will tell you what each is, or if you're just looking for delta, if you're just looking for an imbalance, structure, prints, things like that. You can go here and check it out. Whoops. This is more of the deep dive. So, like I said, I'm just trying to it's obviously not finished yet, so I got to put it together, and it takes a lot of time. Really, like and it's the holidays, and I put in so much time. So just bear with me, I guess, guys. Let's see. Any other questions before I do the? Yeah, there's no setups today, guys. Really, it was this morning, and that's it. Okay, let's do a. Do you ever use the big trades indicator on Motivave or something similar on the other platforms? Use the big trades indicator. I don't use Motivave. I just use NinjaTrader. Is NinjaTrader the only platform that offers the bar markers and order full footprint? No. Sierra Charts. You can also get this on Sierra Charts as well. Sierra Charts. Here, let me post for you guys so you can actually see what they. There's different types of order full footprints. The way this is the premium version. I'm not gonna use the bootleg ones. This was well worth the investment for me. That's I paid like $400 or $500 3+ years ago. So let me see. Okay. Yeah, I don't like Sierra chart. Those that do, that's great. I don't like it. It's not for me. Okay, I just posted the link so you guys can see. Whoopsies, bro. If you go to that, okay, there's the link is in the like hang on. Wait. Oh, okay, hang on. Okay. What is it called? Here it is, order flow footprint. Okay, there's NinjaTrader. Okay, Quantower, Sierra charts. That's what it is. Sorry. So NinjaTrader, Quantower, and Sierra chart is where you can get this. And they keep updating it. And every time they update, you can actually like update it yourself. And there's a playlist here what each of these do, like what each bar indicator does. Like I said, I use mine differently than most. So I just like the way I use it around my technical analysis. Yes, that's the one I'm using. There's a link on X. There's a link here in Discord. There's a link. Okay, so alrighty, let me go ahead and do the drawing. Quick draws. New quick draw. All right. This is Tradeify, right? Let's see. The person must be here. Philip D. Mr. Philip. Philip. Anybody by the name Philip? Speak now or forever hold your peace. All right, I'll repick. I'm gonna repick only twice, 2 more times, guys, if they're not here. Oh, sorry. I need to do this. Tradeify. Reroll. That's what I'm doing. I'm re-rolling. Look at you here, sir. Sire. Muhammad B. Which one are you, Ivan? Huh? Oh, okay. Well, yeah, I don't see the Twitter. Okay. All right. Well, look at you. You're here, buddy. All right, guys. Well, he's here. You're welcome. Can you DM me, please, so I can send that over to you? Thanks. All right, guys. Thanks for hopping on. Have a no in Discord. He's in Discord, guys. I'm streaming on like YouTube, Discord, Twitter, you name it. Yeah, where's Daniel? Hey, Adam, you know who Daniel is? It's Salt Bay. He's in Discord. He actually claimed his prize last time. I was like, no, that's not you. And he had to show me his email so I had to like actually give, uh, because I gave it to somebody else, so I had to give it to him too. So I'm like, great. It's fine now. I'm like, yeah. All right. Thank you guys. Have a wonderful weekend. See you all Monday. My Discord link is going to be in my bio. I hate saying that. It's in my bio. Yeah, we've got a lot of peoples in there. Okay, I did not. I don't know what I just said. Good night. Goodbye. Bye. I'm done.